What's in store for the property market in 2023? If you're a landlord, you may be wondering what challenges and opportunities you can expect in the coming year. 2022 was a turbulent time for everyone with the rising cost of living and inflation rates. In today's episode of the Property Tax Show, we'll share our property predictions for 2023, plus 3 things investors need to watch out for. Hello and welcome to the Property Tax Show. I'm Nadeem, Head of Tax at Provestor, the Property Accountants, and I'm joined here by Matt Poyser, the co-founder of Provestor. In today's episode of the Property Tax Show, we'll be talking about the uncertainty and challenges coming in 2023 for landlords and tenants alike. So Matt, the first challenge, I guess, is a biggie, which is the interest rate, and a really hot topic for me with clients. I'd be really interested to hear some of your feedback in terms of your experience and knowledge on how interest rate, where we've got to and why we're here today and the kind of things to look out for going forward.
Sure, yeah, absolutely. Yeah, it's a really interesting topic because if you take a bigger view of what's been going on, you go back 30 years, 15 years leading up to the financial crash, the average rate was about 5.5%. Then we had the financial crash of 2008, and for a decade we also had Brexit and we had COVID. So we saw historically phenomenally low interest rates. So we've gone from one extreme to another in a period of about 30 years there. And the question that I'm asking myself is, are we coming into this new cycle for the interest rates? Because the economic situation is very different. Obviously, inflation is rampant at the moment, and the Bank of England are having to respond accordingly. And the interest rates is that lever. So I think the people that I'm speaking to, their predictions are about 4.5% is what we'll see the peak as being probably around the middle of this year. And I think we know as well that historically, when inflation is a problem, the interest rate needs to be held because there's a lag before it having an effect. So you'd certainly expect to see towards the end of 2023 before we perhaps may see some sort of a pivot by the Bank of England to go another way. But ultimately, if you take the turbulence of the financial crash, Brexit, COVID out of the equation and look back at what the norms were there at about 5.5%, is that perhaps an indication as us tending back towards this new norm? So 2023, it's sounding like that we're going to be pretty level with a bit of movement. 2024. Experts are saying we might see it taper off a little bit, but we could see, we might not see the 0.25% that we were used to for many years previously.
Yeah, it's really interesting because, you know, a lot of landlords and me alike have been quite spoilt with the low interest rates for a number of years. And, you know, the sudden increase over the last few years, you mentioned all those things, Brexit, you know, COVID, etc., has maybe accelerated the increase quicker than maybe what would naturally have happened. And that's clearly had a knock-on effect with the market. So it's really interesting to hear, actually. In terms of, you know, we're talking about inflation rates here, and you mentioned 4.5%. That's quite interesting to hear because we're not a million miles away in terms of the current interest rate, and we are hearing that lenders are getting a little bit more confident. And of course, they have their base of rating and that they work off to kind of align with that. Do you think we're getting at the peak or getting close to the peak? Do you believe there's a little bit more certainty in the market?
Yeah, I think if you... There's no way we could have predicted the financial crash occurred, but then after that we had Brexit and we had COVID, so anything could happen. But I think with what we've got ahead of us, the reason for the rate changes is purely about inflation, but we also know that the Bank of England is having to balance this because of the damage to the economy and job losses. So in terms of their agenda at the moment, it feels like and it's sounding like it should be stable and predictable, certainly for the next 12 months. And I guess we know how important mortgage products are to lenders. It is their bread and butter, and that market has dried up. It's fallen off a cliff. So they're going to want to be working really hard to get this market back and stimulated again. Yes, they're at the mercy of the interest rates, but they're going to be poised and going to be working hard to move it again.
And again, we mentioned very briefly, Matt, the solutions to this, you know, in terms of the lenders have a business in their own right. They need a solution to this. Landlords need a way out. What's the kind of things the lenders are doing? I've heard of a product that's potentially available, which may be actually quite a good solution.
Yeah. I'm no expert on this field, and this is where you need to speak to a mortgage broker about your personal circumstances. But certainly, if if you're positioning yourself, which I'm at the moment, to looking at an opportunity ahead to make an acquisition, it's a harder decision because you're seeing the interest rates high, but you're going to be reluctant to tie yourself in if you think interest rates are going to move one way or another.
Yeah.
So I've speaking to a broker, and they were talking about that there's more products becoming available, which are variable rate, allows you to ride this out, but there's no tie-in, which I think is great. I find that interesting because then I can still take advantage of the opportunities ahead, and know that in the future I can improve my finances by switching products.
Yeah, that's really useful to know because it wasn't long ago, maybe 5-6 months ago, I was having conversations with clients about some lenders removing 2-year fixed year periods off the shelf completely because of the amount of uncertainty. So they were going to giving minimum 5-10 years fixed years. So they've reversed away from that by the sounds of it, and actually put a new option on the table here with regards to, look, get a mortgage. It's going to be variable. It might be there's some sort of variation to it over whilst the market stabilises, but actually it gets you on the ladder, and the lenders are getting business at the end of the day.
And the banks are sat on cash. They want to lend money. They want to see that the market buoyant, and that's where they will adjust their products, I imagine, to help stimulate that demand.
Thanks for that, Matt. Really useful to know. So the second opportunity, I guess, is the rental demand and actually how 2023 is going to play out for the rental market in general. So are we facing challenges, do you believe, with the rental market in general in terms of demand? What's your kind of thinking on that?
I think leading on from the interest rates, there's challenges there ahead for anybody looking to buy a property, and we know that a lot of the demand is driven by the lack of affordable properties, and this has just made it a whole lot worse. So I think not only are we likely to see investors on the sideline, but first-time buyers or people looking to move home, I think they're just going to stick around until things settle throughout 2023, which therefore means that will we see just a pretty stable demand for rental properties. And I mentioned earlier, I had a conversation with a landlord, rented out a property and had the choice of 8 tenants. So it was just incredible. And I know this isn't a one-off. I think we all know that the demand is very high. There are lots of problems out there. So certainly for 2023, with everything that's going on with the economy and interest rates, I personally believe that we're going to see continued demand there, that's for sure. We can't solve these problems with the housing market in 12 months.
Yeah, that's right. It's interesting to say that actually because I've spoken to a few clients myself who are in a very similar position. So, actually they've got children, first-time buyers, are currently in the rental market looking to buy their first property and have been for a few years. And actually now with the added uncertainty with everything else, now is definitely not the right time for them to be looking at their first-time house, especially when you're looking at a substantial first-time purchase. And that's keeping them in the rental game, unfortunately. And with cost of living and rental prices going up, it all fuels to, I guess, the market.
And I imagine, are they finding it harder to access finance now as well with the rates going up the way they are? Is lending criteria getting tighter?
Absolutely. And this is the thing you see, because it's actually, everything's fueling the market, and of course the cost of living, people being made redundant, and obviously getting a mortgage, and then of course the lenders not providing a product, is kind of fueling to the whole kind of thing. So that uncertainty is making people step back. And that step back is, of course, then having an impact. So people tend to don't want to rock the boat. So the ones who are renting are having to continue to rent. The landlord is having to put the prices up. So it's having a knock-on effect, isn't it?
Yeah, absolutely.
Thanks for that, Matt. Really useful to know. So I guess the final point in terms of the challenges that potentially landlords are facing is the downturn in the market and actually the potential opportunities that represents. So tell me a little bit what you think may well be happening in the market in the next sort of 12, 18 months.
Yeah, it is interesting because personally I see this as an opportunity. I'm a big fan of data. Looking at the land registry data for a while now, we saw a peak average house price at about £295,000 October last year, and then November was the sign of the fall. Experts are predicting we could see a 10% drop in house prices this year. So looking at 295, 10%, we're down to about £265,000. So it's starting to feel like we could see some bargains on the market. For me, I find that really interesting. I've got closer to what's going on because this is my opportunity. I've been positioning myself now for 18 months, kind of suspecting something like this is going to happen, and I'm just moving forwards on that basis that I'm preparing myself to take advantage of the opportunities and hopefully a buoyant market.
Right.
And it's purely on the basis of my mindset is you make your money when you buy, not when you sell, and this is feeling like a buying cycle opportunity.
Yeah. Really interesting to hear then. So obviously a landlord yourself, been looking at the market for the last 18, 24 months whilst we've been going up and down in terms of the turbulence, but yet, and of course all the lending issues that we've already discussed about, not deterring you from still going in the market, you know, knowing well that it's going to be a drop, but actually, like you say, it's the purchase price.
Yes.
That's a conscious thing for you, and actually taking advantage of that potentially as well.
Yeah, absolutely. I feel like I've been on the sidelines for a while. Lots of people there coming along as well on the sidelines. They can see this opportunity and move forwards. But along with this as well, I'm also very aware of it's one thing looking at the data and having an opinion about what will be a great purchase or not, but I also know that there's been a lot of changes with tax of late, especially with changes in government, etc., leadership. I know capital gains tax and stamp duty is continuing to be it's not stable. What are your thoughts? What we should be looking at in terms of considering the effects of those tax?
Yeah, really interesting point, Matt. So a lot of my consultations right now are about taxes like CGT and stamp duty, predominantly because of obviously the announcements that you mentioned in the budget, which is obviously reducing and tapering our CGT allowance right down from 12,500 almost to right down to 3,000 in a couple of years. So clearly those people who are thinking of selling are now thinking of selling because they want to utilise the tax allowances as much as possible. But actually all those ones who are taking a bit of a back step and actually reviewing their portfolio and thinking, how can we potentially diversify, sell some of those weaker properties, use a limited company, or actually go into a completely different type of area, completely into maybe commercial properties or furnished holiday lets. So actually a good opportunity for them to sit back and actually review whether from a tax point of view, it's right for them to sell because it's tax efficient for them to sell right now compared to the next 2-3 years. Both CGT and also stamp duty. So again, from a stamp duty point of view, we had an increase in our bands with the first initial mini budget announcement, but that got reversed in the second one. So 31st of March 2025, we're going back to our historic stamp duty rates, which means £125,000 is when you start paying stamp duty. So clearly there's a saving to be had right now, or at least for the next couple of years. So there's things for you to potentially invest in because again, from a stamp duty point and also from a selling point of view, but you know, from a tax and a commercial point of view, is it the right thing for you? So my advice here, and I'm sure you've considered this, is really, although you're looking at buying certain properties whilst the market drops, you're looking at the commerciality of your entire package and whether actually what you're doing for the long term makes sense for you now as well.
And this is it. It's one thing looking at what the market's doing and having an opinion as to what looks like a good purchase with potential yields, etc. But it's far more complicated when you consider the tax side of it, because if you're considering furnished holiday lets, mixed use, residential, personally owned versus limited, it's a whole minefield.
Absolutely, And one thing I was going to mention there, you mentioned furnished holiday lets there, was Matt, is actually the recent trends that we've seen in the last few years, because of Section 24 over the last 4 or 5 years, has moved people away from buy-to-let properties because of the mortgage interest relief, using the furnished holiday let as a potential income generator, because not impacted by Section 24, generally giving you better high yield earning properties. And then of course staycation, COVID, and people actually thinking, well, actually we can take advantage of this.
Is that a trend that you're seeing from talking to our clients?
Absolutely, So for the last 12, 18 months, we're certainly seeing an influx in those kind of properties being purchased. And I personally believe, as an advisor and as a landlord myself, that actually this next 12, 18 months, we're going to see a real push in that area, because people have been converting their main houses or converting their existing properties into furnished holiday lets. So we are now going to have a potential downwind in terms of property prices. I think that's
it makes sense, doesn't it? Going back to what we were talking about, interest rates, that is having an impact. It's there because of inflation. Cost of living is high. People are just not noticed before the luxury holidays, so they're going to be thinking more about self-catering. So again, it's just an opinion, but a lot of this data comes together, and you can see opportunities ahead, can't you, for many years.
Absolutely. So like any downturn, there's always opportunities there to be had. So really appreciate your time, Matt. Thank you for joining us on the Property Tax Show. Really nice to have you again, hopefully once again. Perfect. Thank you very much. Thank you for joining us. We hope you found the episode useful and that's given you some things to think about when planning the year ahead. Now, if you have any questions, please drop them in the comments below and we'll do our very best to help. And if you found this video useful, please hit the like button and subscribe to our channel. Thanks again for watching, and I'll see you in the next one.